Investing in the stock market can be intimidating, especially for beginners. It's important to remember that investing without research is like buying a car without looking under the hood. You might get lucky, but you're more likely to end up with a lemon. Researching stocks before you invest is crucial to making informed decisions and minimizing your risk. It helps you understand the company, its financials, and its potential for growth. This knowledge empowers you to choose investments that align with your financial goals and risk tolerance. Think of it like buying a house. You wouldn't buy the first one you see, would you? You'd want to check the foundation, the roof, the plumbing. You'd want to know about the neighborhood, the schools, and the property values. Investing in stocks is no different. You need to do your homework to make sure you're making a sound investment. To research a stock effectively, you need to understand three fundamental elements: financial statements, company news, and stock performance. Financial statements provide a snapshot of a company's financial health. They include the balance sheet, income statement, and cash flow statement. Company news can give you insights into the company's operations, management, and industry trends. This information can be found in press releases, earnings calls, and news articles. Finally, analyzing a stock's past performance can help you identify trends and make predictions about its future potential. Think of financial statements as a company's report card. They tell you how much money the company is making, how much debt it has, and how well it's managing its cash flow. Company news is like listening to the company's leaders talk about their plans for the future. And stock performance is like looking at a company's track record. It tells you how well the company has performed in the past and can give you some clues about how it might perform in the future. Now that you understand the basics, let's walk through a step-by-step guide to researching a stock. First, identify your interests. Start by thinking about industries or companies that interest you. This could be anything from technology to healthcare to retail. Next, use reliable sources. Once you have a few companies in mind, it's time to start your research. Use reliable sources of information such as company websites, financial news websites, and investment research platforms. Then, analyze financial statements. Take a close look at the company's financial statements. Pay attention to revenue growth, profitability, and debt levels. After that, read company news. Stay up to date on company news and industry trends. Look for information about new products, management changes, and competitive threats. Finally, evaluate stock performance. Analyze the stock's past performance. Look for trends, volatility, and any red flags. Section 4. Making informed decisions. Tips for beginners. As a beginner, it's essential to start slow and not get overwhelmed. Don't try to become a stock market expert overnight. Instead, focus on learning the basics and gradually expanding your knowledge. Another crucial tip is to diversify your portfolio. Don't put all your eggs in one basket. Invest in a mix of different stocks across different industries to spread your risk. Lastly, remember that investing is a marathon, not a sprint. Stock prices will fluctuate, but over the long term, the market tends to go up. Be patient, stay the course, and don't panic sell when the market dips. Section 5. Minimizing risk. Protecting your investments. Investing always involves some level of risk. However, by following a few key principles, you can minimize your risk and protect your investments. First and foremost, never invest more than you can afford to lose. Secondly, avoid emotional investing. Don't let fear or greed dictate your investment decisions. Stick to your investment plan and make rational choices based on your research. Finally, don't be afraid to seek professional advice. If you're unsure about something, consult with a financial advisor who can provide personalized guidance. Remember, knowledge is power, and the more you learn about investing, the better equipped you'll be to make sound financial decisions.